Crypto Kids, the price of the S&P 500 has officially hit a brand new all-time high, guys. 7,000 for the S&P has been seen today. We're actually at 7,022. And guess what we're doing? We're following 1996 to the 2001 S&P price fractal literally almost perfectly. It's unbelievable. We spoke about this scenario multiple times, and I think we're going to see a good sweep of the highs that were created in January, and then towards 2027, we likely see a further drop. At least this is what the fractal is currently stating. What about Bitcoin, though? What is Bitcoin's reaction, and why is the S&P going into a new all-time high anyways? Well, it is completely due to the developments in the geopolitical scene, which I want to update you completely on. We have the Strait of Hormuz, we have tariffs, we have Kevin Warsh, and Fetcher Powell news. So get ready. This video will tell you everything you need to know about the macro markets, about Bitcoin, and also the latest breaking news. I'm going to be doing a full breakdown on STRC, the preferred equity product that Michael Saylor is able to purchase thousands of Bitcoin per day with. There will be a full detailed breakdown and my thoughts on the STRC product. Is it going to end Bitcoin? Is it actually good for Bitcoin? That will be coming up over on Sunday. And on Saturday, I'm going to be posting a video on World Liberty Financial. I want to, from now on, make the weekends interesting content days. I think the videos we post normally Monday to Friday are interesting regardless. I mean, who doesn't want to talk about the Strait of Hormuz on Wednesday, 12 a.m., right? Exactly. But over on the weekend, I was thinking maybe we bring some more investigative journalism to the picture because I actually quite find a passion in that too. With that said, if you end up enjoying this video, do me a favor and please kindly destroy the like button because it helps push this video to a wider audience. If you're not a crypto kid, do subscribe for daily content because, well, we're here in the bear market and we're posting daily. And actually, it's quite tough. It's not as easy as it seems. Thankfully to President Trump, we have a lot of content in the bear market to talk about. Usually you don't have that. So I do want to thank President Trump for just being online 24/7, whether it's tweeting or if it's posting on Truth Social or if it's blocking and unblocking the Strait of Hormuz. This one was so funny, dude. The Iranian consulate in Hyderabad said that the Strait of Hormuz isn't social media. If someone blocks you, you can't just block them back. We'll get into that. First, S&P 500. We have hit 7,022. We're following 1996 to 2001 price action, almost completely exactly the same. Currently, the expectation is a further drop-off or a big drop-off in 2027. That's what I'm seeing for the S&P. We are in dangerous territories. The correlation between, or if you look at the M2 money supply, right, and you measure it in relative to the S&P 500, you can tell that we're at dot-com bubble eras. You are printing so much money. That money printing is translated into asset price inflation. When you print money and you debase currency, what do investors do? They need to hedge themselves against that inflation. So they put their money into things like the S&P, into things like, gold, silver, and you get a big bubble. And it can take some time for that bubble to burst. So I think that 2027 expectation isn't too fictional after all. But if the S&P is pumping, then why isn't Bitcoin pumping? Very fair. Well, we covered this in yesterday's video. Just because the S&P is outperforming Bitcoin in this cycle, it doesn't mean when you put it onto the same scale, or not the same scale, but in a new price scale, same scale, the percentages are more volatile for Bitcoin. But when you look at the general trend, S&P is outperforming Bitcoin in this cycle. But remember, in the last cycle, Bitcoin outperformed the S&P. So we're switching roles a little bit, which is fine. I think we can allow that. 77 is the level that Bitcoin needs to break in order to reach the 85K territories. That is still my positioning. That is still my thought process for Bitcoin. No need to overcomplicate it too much. It's firm. The level is there. 77 to 78K. If we can break above it, beautiful. I think we can reach 85. In my last video, people were saying, why did you switch from 76 to 77, 78 now? Very fair point. My mistake for not giving you the context. Basically, whenever Bitcoin refuses to have explosive moves, the longer it takes Bitcoin to get to that move, so the more it consolidates, the higher the price of resistance actually becomes. in the situation that we're in, because we have a the resistance. When we look at the multi-cycle resistance on the weekly time frame, it's slanted. So is the bear flag resistance. So is the bull flag. So is the W resistance. So this is why, as Bitcoin takes its time to make the moves above critical lines, it just pushes the resistance higher and higher and higher. And now it's sitting at $78,000. If you want to trade Bitcoin, if you want to get ready for Bitcoin's breakout of 77, 78, I'm honestly hoping that it does do it. The S&P hitting a brand new all-time high will give it some momentum. Crude oil is dumping thanks to bullish news from the geopolitical situation. I will cover that literally in a minute or 2 minutes time. So I think there's a good chance. I really pray that it does. I don't want to increase my long exposures unless we do get 77, 78 broken. Why? Because you're still in a bear flag and you're in a bearish trend. You're in a bear market. So it always pays off to be more bearish in a bear market than bullish, just like it pays off to be bullish in a bull market rather than being bearish. That's just how the story goes. But if you want to be buying Bitcoin for the long term because you believe that eventually currency is going to debase and the dollar will lose most of its value, just like what happened to the yuan. Well, they call it the Bao Cow, if I'm not mistaken. In the Ming Dynasty, this was like in the 1400s, long time ago. Between the 1400s to the 1600s, they switched to the silver. They had fiat currency, which got insanely debased. There was so much hyperinflation, the people stopped using the fiat currency. They just didn't want to use it. It was inconvenient. There was so much currency to be paid to be purchasing something in return. It wasn't convenient anymore. So the people themselves, they switched to silver. They switched to using silver. And when everybody gradually started adopting silver instead of fiat, governments began to silently move into silver themselves as well. So I think that's what's going to happen with Bitcoin. And I think when that happens, Bitcoin's market cap will be tens and hundreds of trillions of dollars. We're currently sitting at 1.49 trillion. And I just find it to be a fantastic opportunity to be buying at 74,600 for the long term. If you want to be doing that and support the channel and get incredible bonuses, of course, I'm assuming you guys destroyed the like button. You can check out the links in the description down below to sign up to LiveX, Weeks, or BTCC. With BTCC in particular, you can get a very cool deposit bonus. Check out this link to see the latest campaign details, and you'll be able to sign up, trade Bitcoin, trade cryptocurrency, trade crude oil, S&P 500, gold, and all the other beautiful TradFi products which are available. Shout out to BTCC and our other exchange partners for sponsoring this content. With Bitcoin, like I said, long term is bullish. Can Bitcoin fall another 20% if we get rejected here? Can Bitcoin fall another 20, 25, 30% to the downside? Of course it can. Of course it is possible, but we're not going to be able to time the bottom fully. Like, it's very complicated to exactly time the bottom. So why not just start buying when you're close to reaching the bottom? And in my opinion, we're very close. If we haven't hit the bottom, then we're very close to hitting the bottom. So if you want to accumulate, if you want to be in this, don't jump in when we're at all-time highs. That's stupid, right? I mean, it's not so stupid if you're going to hold it for the long term. But if you're jumping in and you're buying at all-time highs and then selling from panic, then you've lost money. Why would you do that? If you want to accumulate, these are the prices to do so. Can we drop another 20, 25, 30%? In my opinion, very possible. But like I said, I think we're close to the area of bottoming out, and because we can't exactly predict when the bottom will take place, that, you know, it's just better to DCA. That's at least what I've found based off of my personal experience. And hey, I think oil prices are going to reduce more. We're currently sitting at $87 for crude oil. Crude oil is dumping big time thanks to the geopolitical developments. I know I said I would get to it in a minute's time. It's been many minutes. Here we are. So crude oil, $87.9. The fair value for crude oil is between $65 to $70. How do I establish that fair value? Well, I look into the long-term contracts. I look into the commodities contracts for crude oil that extend into the next 2 years, 3 years, 4 years, 5 years, 10 years, and they're all priced between $65 to $70. And that's how I get that estimation of fair value. We're dropping. Qatar warns of imminent global energy shock if the prices of crude oil don't dump. Yes, they've surged, and we've been at $100 for a while, or around $100 for a month and a half. The world economy can bear the cost of this for a limited time. For a month, for 2 months, you'll somehow be able to manage. Maybe some airlines will reduce the amount of flights that are being taken into account. Kerosene, jet fuel gets so expensive. Okay, they will use some of their cash flow and compensate. But if it extends to 3, 4, 5 months of high pricing, you will suddenly see the clothes that you wear go up in huge value. You will see the things that you eat, even, because there's shipping involved, and things don't just arrive to your country with teleportation. If your country is importing a bunch of goods, and a lot of countries import many things, then the vessels that those goods are transported on, they consume fuel. So it impacts the entire supply chain. The CPI data, why did it go to 3.3%? It went to 3.3%. Mostly due to the rise of energy prices. When energy prices go up, everything goes up in value. And if this continues for longer, then it's not going to benefit anyone. It's not going to benefit President Trump. It's not going to benefit anyone. We can see that the petroleum reserves have come down to almost Biden-era levels. The petroleum reserve needs to be bought back up. That would mean that crude oil prices need to push down so that America doesn't overpay for crude oil. And with President Trump predicting that oil prices will be back to or below previous levels, and given his track record of accuracy of predicting where markets are going to go to, I think it's gonna go down. I think it's going to go down. Trump says that they're going to make a deal, referring to Iran. Trump also says that an end result regarding Iran may come soon. And a source told Reuters that Israel expects the ceasefire with Iran to be extended. So these are all positive developments. What I don't really understand, what my mind doesn't really grasp, is that America, they introduced a blockade. So they said that basically any vessels that are in the Strait of Hormuz, they cannot enter. I mean, they shouldn't enter or exit the Strait of Hormuz. To refresh your memory, the Strait of Hormuz is this thing right here. This strait, they call it, enables the transportation of roughly 20% of the world's crude oil supply. It's a very important place. Now, Iran was closing it, right? And they said, we will selectively choose which vessels can pass. So they want to choose their ally countries to pass, and they will charge $2 million fees per passage. And then American ally countries obviously don't like that. It's an economic catastrophe for not so much for America, because America has a lot of crude oil, but American allied countries, and especially countries in Asia, they had energy problems. So this strait needed to be open. So President Trump was pushing for that. But then out of nowhere, President Trump said that they want to blockade the Strait of Hormuz, meaning they want to close the Strait of Hormuz instead of keeping it open. We said maybe, okay, they want to start selling some American crude oil because we know that they have a lot of crude oil that they want to sell. You can see a lot of shipping has been redistributed, and a lot is going to the Cuba, going through Cuba and collecting crude oil now from America. So maybe that was the strategy overall. However, when you look at the data sets, you can clearly see that over the past few days, there have been vessels that are passing the Strait of Hormuz, even though that the U.S. announced that there have been no vessels that made it past U.S. forces. So I just, look, there's some things that I don't understand. I really don't get some things, but it's just what it is, we don't have access to that level of information. So we can't really comment on it apart from showing it to you and showing you and stating the facts. Iran's top joint military command mentioned that if America continues to prevent trade flows, or armed forces would act to prevent the continuation of trade flows in the Red Sea, if the blockade against Iranian vessels continue. The Red Sea controls roughly about 4% of global energy supply, but Iran is not, geographically, they're not really in a position to directly affect the Red Sea, so I'm not so concerned about its economic impact. Again, another one that I can't quote on or cannot commentate on much. It's an event that we will have to see develop in front of our eyes. With tariffs, remember President Trump said he would do 50% tariffs on any country that would supply weapons to Iran. Tariffs are bad. That's why we're mentioning it. But according to President Trump, President Xi declared that he will not provide weapons to Iran, which I assume means no tariffs on China. When we look at monetary policy, particularly the Fed, President Trump stated that if the current Fed Chair Powell does not resign, he'll fire him. He does not have the power to do so. He claims that interest rates will fall once Kevin Warsh becomes the new Fed Chair. There is a lot of weight upon Kevin Warsh's shoulders. Powell, when he was asked about what advice he would give to the upcoming Fed chair, he said, do not bend the knee to politics. We're in an environment where really rate cuts do not make sense. They just don't make sense. Before the military operation, fine. Yes, cutting rates, perhaps it is justified. But now it doesn't make sense. The new Fed chair will be stepping in just a few months' time. I don't think it would make sense for him to do it. If he does do it, it would show a loss of Fed independence, which I think would cause the dollar to lose value because people would lose trust in the dollar. And in that event, Bitcoin could see an interesting pump towards the upside. President Trump on the Fed mentioned that I hope Fed Warsh gets confirmed next week. The confirmation hearing for Kevin Warsh is next week. So Kevin Warsh is actually likely going to become the new Fed chair, but we don't have the confirmation on it yet. If Kevin Warsh is not confirmed, then things could take also another interesting turn. Yesterday, we spoke about X's plans to help the crypto industry. We mentioned that it's probably going to be them launching their cash tags, which they announced over in January. That's exactly what they have done. Does it improve the crypto industry? No, it doesn't. But over in Canada and America, if you type the Bitcoin ticker or any other stock ticker, you can see the price and you can see the tweets about it instantaneously. Is it cool? Yes. Does it concern us? Not really. Morgan Stanley introduced their own ETF. It's not a spot ETF, so it doesn't open up doors to so much capital. It's a trust. But given the success of already buying roughly $83.6 million, I think they will go ahead and introduce a spot ETF, which would help with Bitcoin in the long term. Finally, Morgan Stanley mentioned that tokenization is the next major step for their business. Where is tokenization happening predominantly? It's happening on Ethereum. Yes, Ethereum. So am I buying Ethereum? Absolutely. I think that it's undervalued. I think we're at very good support on the macro. Again, I don't want to be buying Ethereum close to all-time highs. I want to be buying it down at support. That concludes today's video, ladies and gentlemen. Make sure to stay tuned for, I'm posting here daily, but over on the weekend, if there's nothing happening in the markets, maybe I'll do it earlier, but I will be dropping a video on STRC explaining if it's good or bad for Bitcoin, and I will also do a video on World Liberty Financial. Thank you all for watching. Take care, and I'll see you all on the next one soon. Bye-bye.